So I've seen a couple of headlines from China. I just wanted to go over a couple of things. But China now is disputing a Russian city, which is an interesting one. We've seen they have flights, they have fighter jets flying around Taiwan. They have tons of ships patrolling the South China Sea, and the America has tons of warships in the South China Sea now. Um, and they have an actual ground war going on with India now over some disputed land territory. But I found this video, which is really, really crazy. Yeah, so let me just jump forward. Like they're claiming islands from a ton of different countries, and yeah, China's making all kinds of land claims. So yeah, I just kind of wanted to touch on the China situation right now because it's been in the news a bit. But China has completely claimed Hong Kong, and the U.S. Congress, I think it went through the House and not the Senate, passed the bill for the U.S. to sort of declare Hong Kong independent again, or something like that. So the U.S. is actually doing a response to Hong Kong. Um, but yeah, it's not just Hong Kong and Taiwan that this is going on. Like China is having land disputes, all the little islands around China that belong to other countries, and even huge land territories. they're they're yeah they're being kind of aggressive at the moment. And so I've seen a few videos talking about like a hot war with China and the U.S. And so militarily, I mean, the U.S.'s military is like it's bigger than the next like 10 countries combined. So as far as like a direct war, the U.S. has a way superior military to China. But the U.S. is in the South China Sea right now. They have warships all around China, and they have military bases on the land side of China and around Russia as well. Um, so this is pretty tense, and the situation with Hong Kong now, the U.S. is looking at putting sanctions on China, and America definitely is not extending a dollar swap line to China. So this is a tense thing, and basically, if the U.S. and China got in a direct war, like, U.S. would have a huge military, superiority, and but the big thing is the U.S. dollar right now. Um, the situation that the U.S. is in is they could win a war or whatever winning is, but the result on the dollar as the world reserve currency could be a huge risk if the U.S. went to a big war right now. And that's pretty much what happened to the British Empire leading up to World War One. They got a bunch of debt, and then they went into World War One, and that pretty much ended the British pound as the world reserve currency, the war debt that they took on. And so I think as far as America is concerned, it's not really a military threat or anything like that, but a war with China would be a big threat to the dollar. And China's been openly, talking about trying to get away from the dollar, working on digital currencies, stacking gold. There's a bunch of countries doing that sort of stuff right now, bartering outside of the dollar. So the dollar is potentially starting to lose a little bit of control as the world reserve currency right now. So that's a really hot topic. And yeah, it's not just the U.S. and the dollar that China is making moves on. Like, they're claiming all kinds of land nearby, and so that's something to watch develop now. But I guess Hong Kong is the big one that they are actually physically, invading and claiming right now. And then they're looking at Taiwan and a bunch of other islands right now. Yeah, so I just wanted to touch on that. The hot war with China. So by hot war, that's like an actual, war with guns. Yeah, and I just got like a t-shirt shop up. This is mmtgear.com. If you come here, I have some fun shirts for kind of stock trading. This one's funny. I put on my shorts today. This is for anyone stuck at home, trying to short the market, potentially in their underwear, or the stonks only go up, up, up shirts. So yeah, if you want to support the channel, mmtgear.com will take you here. And then also like and subscribe. Almost have enough subscribers to monetize the channel. And the markets are closed today, but there was futures trading all day today, and so I think they're closed now, right? Yes. So here's the look at what happened today. Just kind of broke down a little bit, and so it looks like it was a rejection off the same kind of top trend line here. We've been rejected off of multiple times, and it's broken down underneath the kind of support line that I had on this run up. And so this is probably 70-30 bearish or something like that at this point. At least to get to the middle of this kind of consolidation zone, but a bearish target would be down in this area. And that is what I think is most likely after this breakdown, is to come down here and test out all of this stuff, at least the moving average here, but potentially get into here and see if we can get a bounce off of this stuff. And so that's what I think is most likely after this kind of breakdown on futures. But these are just futures contracts, and we have the whole weekend to get crazy news and stuff like that. So the jobs reports came in better than expected. People are excited about that. Oh, Tesla is going nuts today. Let me flip through the momentum and see what it looks like, and then I can take a look at Tesla. Yeah, so the daily candle is kind of the month by month outlook. It's bullish territory and kind of neutralizing in bullish territory. So this is not looking bearish yet as far as, the next month or something like that. Like it needs to turn down and get down to the bearish side of the chart in order to become bearish. And right now it's trending kind of a little bullish on the bull side of the chart. So that is looking a little bullish. And then as we get closer to the trading here out a couple of weeks, it's in bullish territory, just starting to turn down. Yeah, just starting to break down a little bit. So this is a pretty weak bearish move actually in terms of momentum, and coming into maybe, the open, or we can get in closer than that. Yeah, so it's a little bit bearish on the very short term, so probably coming, but well, the whole weekend, so can pretty much ignore the very short term. Like this chart is probably the closest one. Like it's kind of, making a weak bearish move right now. So it hasn't actually broken down and gotten any bearish momentum now. But this is a breakdown position where it is more likely to break down than stay up. And I mean, what we've been seeing in this consolidation zone here is just edge to edge, just swinging around. Only once did it go like halfway. Almost every time it swung edge to edge. So, yeah, that's kind of the bearish target from this chart that I'm looking at now. And then just in general, this is the 2-year bull support line off the 2018 crash. And so the bulls, you need to get above this thing, but also need to get up here above this guy to get into an actual bullish trend. And this one down here is a 12-year bull support line that supported the whole run off the 2008 financial crisis crash. And so we're above that. So that's a bullish target, is to get up here above the 2-year support line, and a bearish target. I mean, you want to break under this thing to actually get into a bearish position where you could call it like a bear market or something like that. Like this is like bull market territory. This is bear market territory down here. And this is a dividing line generally between bull and bear. But, right now we're in bullish territory, but we still have a downward overall momentum. So it's just kind of questionable if it's a bull market or a bear market, and it's just kind of chopping and swinging around here. But we did get trading action, and it did break down a bit, and that looks pretty bearish. Let me see what Tesla closed at. Yeah, okay, so yeah, Tesla Tesla just went absolutely nuts. It's broke out above uh, above 1200 with a huge gap, and so this is pretty nutty, parabolic with a gap. Um, oh man, that looks just absolutely crazy. So I don't know. I mean, that looks pretty dangerous. That looks pretty parabolic and dangerous. I mean, we got like a parabolic kind of gap jump here. Those usually will come back down at least a little ways. But I don't know, that looks parabolic nutty. So yeah, that is a super, super dangerous spot to try. And this is not investment advice, but that's a super dangerous spot to try to go long on Tesla. And then of course, shorting Tesla, people will get burned quite a lot. And the puts, like if you're doing options, are kind of expensive on Tesla. But right now, I mean, they've overtaken Toyota as the biggest market cap auto company in the world, which is absolutely nutty because their production is nowhere near that. But their market cap doesn't have to do with fundamentals. It has to do with, an outlook to the future. People are expecting this to be the number one car manufacturer in the world in the future, um, and just the ton of hype and celebrity from Elon Musk and all that built into the stock. But as far as the actual industry goes and the competitors, I mean, you have other car manufacturers across the whole world also making electric cars, and also gas vehicles are not going anywhere right now. That's more of a lookout, maybe 10 years or something into the future. But the gas vehicles are actually more profitable than electric, and yeah, Tesla just seems crazy, and I'm wondering if the fundamentals are going to catch up with it anytime soon. It's pretty hard to project kind of or predict when fundamentals will start taking over. But I mean, you see like Hertz going out of business, like, and the other car rental places are either downsizing or looking at bankruptcy as well. And so there's just a flood of vehicles coming onto the market, and now people, there's a worldwide depression. America's maybe in a recession or not, depending on the statistics that you look up. But I mean, basically, the whole world, including America, is in a recession or depression right now. And Tesla is like luxury electric vehicles, and so the demand for these, I just can't imagine the demand being that high, and the supply of just vehicles in general is going to be super, super high because there's all these new rental vehicles coming onto the market, and just like the other auto manufacturers that are getting in trouble are all getting bailed out, and so there's not any competition really going anywhere. And when you have people that can't pay bills, like just luxury things in general, like Tesla's expensive vehicles, um, so I just don't think that market really looks very good for luxury kind of electric vehicles. It's going to be like the used gas vehicles that people are going to be able to afford now, during the crisis, for the foreseeable future. And as far as gas, gas vehicles are going to be around for a while. I don't know how long it'd take, 10 or 20, 30 years to kind of get all the, well, you have to stop making the gas vehicles first. Like they're still making a ton of gas vehicles. And then once you stop making them, it still takes another 10 or 15 years to kind of cycle them all off the road. If you were going to switch all the way to electric, like that's going to take a while. And so this is way future looking, and not really taking into account like 20 other vehicle manufacturing companies that are all working on electric vehicles also. So yeah, I mean, I just think Tesla's absurdly overpriced right now, to value. I mean, the comparable car company values are around like $40 a share or something. The car companies are not that profitable, and their stocks are generally not that expensive. um, so Tesla's crazy. Let's look at Tesla for whatever reason. I don't remember why I was trying to look at it, and I think the dollar's moving. Yeah, take a look at the dollar. So it looks like um, the dollar's still kind of holding support, and we're above a long-term bull market line on the dollar here. If you go back out to say like a weekly chart or something, yeah, you can see like way back to the 2008 crash and 2011. We've been in a dollar bull market for a long time, lots and lots of years, and we're just kind of testing this line and not breaking through it yet. So if we break down under this, it'll be something to look at. But as for now, I mean, the dollar is still just getting stronger since the 2008 crash. And, that's like the Brent Johnson milkshake theory or something like that that people think is super controversial. It's like that should be the base case. That's what the dollar has been doing forever. For the last 12 years, it has been in a, kind of a little bit of a bull market, like not insane, but this is the trend line, and it's hasn't broken it. So I mean, to me, the dollar going up is kind of the obvious thing. Like if it breaks down, that's something weird to look out for. Um, and so the dollar getting strong. I mean, it hasn't been bad for the stock market in general because this was during that whole stock market bull run. But during the liquidation, the dollar came down with the stock market, and it's been swinging kind of opposite to the stock market ever since that crash in February and March. And so it's definitely something to look at. But yeah, for now, like this little tiny thing right here is what everybody's talking about, and it hasn't really broken down yet. So um, yeah, I guess as a weak indicator, the dollar is still trending up a little bit, and it should be kind of inverse to the stock market, slightly bearish maybe, but not that big of a deal. But it's really the Fed balance sheet. I'm talking about this a lot, but they posted the balance sheet update yesterday, and the Fed has decreased their balance sheet farther. It's almost down to 7 trillion flat now, and the Treasury General account is still going up, but not quite as steep. So if the Treasury General account starts to come down, that's something serious to look at because that's helicopter money coming in and out of the Treasury account versus like the balance sheet kind of money that the Fed produces. Um, but right now, the Fed's not creating new money, and Congress is still taking money out of the economy. So that's the negative liquidity thing that I've been looking at over the last 3 weeks or something. I think that's a bearish kind of driver on the market right now. And then what did the VIX do? Yeah, the VIX came down a bit. So volatility is still high. 20, yeah, I mean anything in the 20s is high, but it broke down off of the kind of shelf it was on here. And so this is during the crash when volatility went crazy here, and we got another spike here. Let's go to like hourly. Yeah, so this is just the last week or so here. And so it was, it spiked and it kind of was trending around this support, this trend line. But that run over the past week drove it way down. And so we'll see if it, and this is just kind of swinging opposite. So that little bit of a bearish move at close, just kind of wobbling a little bit. We're not going to be able to see the VIX until Monday. Yeah, so that's just a general look at it. The liquidity is bearish and the setup is a little bit bearish. It looks like it wants to make a bearish move to me right now. It looks like it's breaking down. And I would expect it to cross at least down to here. That's kind of the bearish target. And I think that's actually pretty likely from here. So that's the look. And yeah, thanks. And check out, go in the comments and I'll chat with everybody. And yeah, have a great 4th of July weekend. Don't start anything on fire, and happy trading.